Mm-hmm.
Welcome to the Halftime Report, presented by Tackle Trading.
And welcome out to our halftime show here on a Thursday, July 26th. And the big news of the day is on Facebook. We're going to get to that shortly. Matt, how you doing today?
You know, I'm doing better than Mark Zuckerberg. He lost $16 billion overnight, biggest one-day drop in Facebook. It's one of those earnings announcements where everybody is watching it, every hedge fund, every institution, every trader. It is the number one stock held at the hedge fund level, and obviously part of the FANG stocks. And, with what happened with last week with Netflix, I think everybody was on pins and needles, kind of, waiting for that Facebook. Yesterday we basically said it was priced very similar to Netflix for perfection. And if they weren't perfect, it was going to come down, had the ability to come down hard. But Tim, I didn't expect a 20% decrease overnight.
Nobody did. In fact, all they did was expect 5%. But I'll tell you this, Zuck would have listened to us yesterday. He could have hedged his position.
Could have bought put option.
We said pretty clearly that if you've got Facebook long right now, you have to hedge. Not a debate.
We've said that. Although Zuck has been selling $50 million worth of Facebook stock every day for about 2 straight months.
Well, I mean, how much does that add up to? So 30 and 600 million, about 1.2 billion. He's got 80 billion or something like that. So I get it.
Nothing.
It is what it is. He's just getting a little pocket cash, to be able to take all those trips he's taking.
Yep.
Well, Facebook down today. We're going to have to talk about that, obviously. Also, the market, rallied strong yesterday and actually has some resiliency today. Let's light this puppy up. Go ahead and share your screen and let's get right into it. By the way, welcome if you are here and watching us live. It's good to see you guys. And as always, we like seeing our team come in here. And young Cam, you're producing. Make sure you get that shared and out there so people know that we are live right now. Let's start with the S&P 500. We'll get to Facebook here in a minute, Matt. It's gapping, already happened and is kind of backfilling right now. Starting with the ES contract, you got a little green candle. But the market is flat today, down actually about 1 point from where it closed yesterday. Still very, very strong. How do you explain the strength and the resiliency?
Tim, after Facebook's earnings were posted, my initial reaction was to go look at the futures in the S&P 500, in the NASDAQ. And as you can see here, if I drop this down into a 15-minute chart here, this was the end of yesterday. As you can see, it really rallied coming into yesterday's close. Yesterday when we were talking, it was right into this range. It was rallying. It was showing some positive behaviors. We were liking it. We were talking about how Trump was going to, have a discussion with Juncker from the EU, later on in that day. And that could present, either some positive momentum or some negative momentum, depending on how those talks went. Those talks, from all looks from it, the talks went really, really good. Juncker and President Trump agreed for the European Union and the United States to work towards zero tariffs between the two countries. I think that is a positive step in the right direction from a trade war perspective. And, I took the news as positive and quite frankly, the market took the news as positive. As you can see, it's just rallying really strong coming into the close from yesterday. Now, this is what was interesting, and this is what kind of caught my attention after the initial reaction to Facebook's news or Facebook's earnings report. I wanted to come look at the S&P 500. S&P 500, as you can see, the futures market takes a little bit of a break after the market closes, and then it reopens back up. Once it reopened back up after Facebook's news, you see this tiny little gap here. It closes right here about closes yesterday. Right around 28.45, right? 5 minutes later, or seemingly 5 minutes later when the market opened back up, excuse me, it gaps down. Excuse me, Tim, go.
Clear your throat and get yourself a glass of water there, young man. No need to get yourself an injury. This is a contact sport here on the halftime report.
It really is a contact sport.
I got to tell you, yeah.
It really is a contact sport. But, look at this. It gaps down, but then just shows so much resiliency. I mean, and I think that's the word of the day is resiliency. it's just showing so much resiliency in the face of any negative news recently. The market has not sold off hard. It really hasn't. And Facebook's negative news, it kind of caps down. If you're looking at the NASDAQ, which has a bigger impact, you can kind of see that gap down here. You know, this is when the market closed. This is literally when the futures market opens up after Facebook's news, and it comes all the way down about 40 points in the NASDAQ, which is about a 0.5% move on the NASDAQ. But then look at this, no follow through on the sell-off. And that's what I'm seeing today across the board is, you know, we're basically having a flat day in the marketplace. If you look at kind of the daily chart here, we're just kind of having a little bit of a flat day in the marketplace. But after the negative news yesterday, you would expect some degree of sell-off, some degree of profit taking. And I'm not seeing that today. I'm seeing the market being very resilient.
Yeah, there's no doubt about it. The NQ down, but a green candle. The ES down, but a green candle. That's telling you that there's no follow through on the candle. When I was a new trader, Matt, I got confused by that. I thought that the candle was day to day, and really the color of the candle is from the open of the candle. Yeah. So when you have a gap down and it's a green candle, that's telling you that the buyers stepped in, they're bringing it back up.
The dip mentality.
That's exactly right. Let's move on to, you know, the RTY. I do want to continue to highlight the disconnect between some of these markets. RTY was up strong this morning. Now it's back down, settling into this range. That is a compression pattern, Matt. Call it an ascending triangle, call it a high base, call it a cup and handle with a little mini handle, whatever you want to call it. It's got resistance there. If it breaks and runs, that's strong.
Well, and one thing I want you guys to as you know, our team that is watching the halftime report today, and thank you guys so much for being the best part of tackle trading. Thank you so much for coming over here and joining us every day for the halftime report. But if you look at the RSI here, Tim, what happens in these consolidation patterns, you basically don't have any true selling off. But as you see it consolidate here, what happens is the relative strength starts coming back down. That's why traders love consolidation patterns, Tim, is once they break out, they have, based on their systems, whether they're looking at potential average yield, or they're looking at stochastics, or they're looking at MACD, or they're looking at the RSI, whatever indicator secondary confirmation system they're looking at, after the consolidation pattern, once it breaks out of that consolidation pattern, it's got a tremendous amount of room to run. And that's kind of what I'm seeing. And I added 3 RSIs, so just give me 1 second here. That's what I'm kind of seeing on the relative strength right here, Tim, is you have this consolidating pattern here. And you know, I think you can technically consider that either a cup and handle or an ascending triangle is what I think you could technically consider that. Either way, both of those patterns are what is known as continuation patterns.
That's right.
So when you're dealing with continuation patterns like the Russell 2000 is seen here with the cup and handle or the ascending triangle, just to kind of show you how that works.
Well, let me ask you a question real quick, just an educational question. Is it important for a student to learn the names of the patterns? Or is it more important to learn the philosophy and the mindset behind it, continuation versus reversal?
There are so many commonalities between continuation and reversal patterns. We've discussed this, you know, we've discussed this at length, actually, when you and I are analyzing the dollar, right? When you're saying, you know, man, I'm kind of seeing a you know, cup and handle ascending triangle formation. And I'm saying, well, I'm kind of seeing a head and shoulders formation is what I'm kind of seeing. You know, there's so much commonality between the two patterns. But the one thing, when you're dealing with this type of pattern here, Tim, as you can see, support, this was support, this is now the new support. If support is increasing and resistance is horizontal, as you can see in the Russell 2000 right now, that in any technician's frame of mind, that's going to be some type of continuation pattern. As long as support continues to rise, that is a continuation pattern. And so when you're looking at these continuation patterns, what continuation patterns do is you see this nice little bullish uptrend that we were going through in mid-April through May, coming into mid-June. This nice little bullish uptrend is now over because of the continuation pattern. Now, what position traders love to do, so swing traders will trade within a trend, right? They'll buy at support, sell at resistance. That's kind of the philosophy there. But with continuation patterns, once it breaks out of the continuation, you not only have your swing traders that love that trade setup, you have your position traders, your trend traders that love that trade setup, your investors love that trade setup. Everybody loves getting in at the beginning of a new trend. Would you agree with that?
Yeah. Well, and I think even from an emotional standpoint, people like the concept of it. I'm going to catch a new trend, right?
Yeah.
But from a trading...
Well, think about it. When everybody's looking at it here, 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 what are they really thinking? When they're looking at it after it's already risen, what are they really thinking?
Well, they're concerned that if they jump in right now, they're going to be the one who has the rug pulled out from under them. It's going to come back.
Oh, I wish I would have bought it down here.
Yeah,
right?
That's right.
Yeah, it's that old mentality. Oh, I wish I would have got in here. Oh, I wish I would have bought on this breakout of the high base. Oh, I wish, right? And so the whole time they're thinking, I wish I would have done it here, 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 here. But now they're looking at the new trend. They're like, oh, now I can get it in on a new trend. It's a really good technical pattern. Now, whenever you're dealing with continuation patterns, they also could very easily become reversal patterns. And that's where the kicker comes in. If resistance holds and ultimately the RTY comes back down into this support level down at 1640, Tim, all of a sudden, that's not a cup and handle. That's an M formation is what that is. And that's why within the pattern, you don't want to take a stance when the pattern is still kind of forming. You want to wait for the completion of the pattern and then the breakout one way or the other. So if I'm looking to trade aggressively on the RTY, Tim, I'm waiting for a close above this key level of resistance. And where I put that key level of resistance is right at 1750. Now, if somebody said, no, Matt, the ultimate high was 1720, I would say, thumbs up, good on you. You have to give that a subjective read on that. I'm putting that resistance level at 1715. If that breaks out of that resistance level at 1715, you could easily see a new trend develop off of that.
I got a question for you. Out of every 100 times you give a thumbs up, how many of them are sarcastic thumbs ups? How many are genuine? How many are sarcastic?
46.7% sarcastic.
That number's sarcastic. I like it. Thumbs up. Here's a question I have for you. If it breaks that high, and I've got a bear call up at 1800, 1810 in September, and I've got all kinds of time and all kinds of cushion, what do? Do you hedge or do you let it go and not worry about it?
Okay, so your bear call is 1810 by 1820? Is that what it is?
I think 1800, 1810.
So your bear call is right here at 1800 by 1810. Okay, if it breaks here, I'm not going to freak out and do anything crazy because I don't expect the market in one fell swoop to run 100 points and then run another 50. I don't expect that to happen. So if what I would expect to happen is for the market to run somewhere into this 1750, retrace back down and give me a better opportunity to probably get out at that point. So I'm not going to do anything. But as it retraces back down, starts rising back up into that 1800, forming that higher high, higher low type situation, at that point, you probably got to manage something. But but Tim, you're 100 points out of the money right now. You got a good, 53 days to go in the contract. You're above the probability cone at 1800. You're going to have retracements. You're going to have bases in those situations that will give you ample time to manage that trade. But where the trade's so far out from here and you having so much range here, I'm not going to freak out of that.
Here's an interesting thing. 2 months ago, we had a podcast with Coach Tyler Craig over at Tackle Trading and Coach Emily Mururi at Tackle Trading from the Women in Trading blog. And I asked them both the same question. And then a week ago, during the monthly mastermind group with Coach Tyler, I asked him the same question. I've gotten 4 different answers that are all logical.
Yeah.
Right.
Well,
different traders.
It's up to the different individual.
Yep. Yeah. And those are veteran, experienced traders who know how to run a system with an out of the money credit spread. One of the reasons I bring it up is that if you are trading, and we look at RTY all the time, but if you're a member of our community, one of our premium systems is the cash flow condor system on RUT. And when you're looking at candles like this, in my opinion, Matt, you have to have a plan in advance. If you're not going to do anything, fine. But if you're going to do something, you should build that plan today, not when it happens. You shouldn't be watching a breakout and then saying, oh my God, what do I do now? you should start thinking through the way that you're going to run your system today.
All I'm going to say, and I agree with that 100%, you should know exactly what you're going to do before it actually happens. So in that bear call spread, for example, if the Russell holds 1700 and it just kind of fades, you're going to do nothing. If the Russell comes back down into to support at 1640, you're going to do nothing. If the market breaks out, for the trader, they might want to take some action at that. I will tell you, in my experience, trade management is so vital. It's so very important to so many different systems. But I think one of the common mistakes people make is they're too quick to come off their plan based on one day in the marketplace. I think they're too quick to manage aggressively.
No, I agree with that. And I think that the big mistake is really just exiting an entire position. If you're going to learn an advanced technique, like the kind of things we work on in our coaches shows and all that kind of stuff, it would be a delta hedge, and it would be for an intermediate or an advanced trader.
Yeah, if you're buy stock.
If you're a beginner, you just got to learn how to position size and have a really simple plan. Don't you agree?
I do. If it breaks, I think the better play on that one, Tim, if it breaks out of 1700 in your expectation and it's going to rise to 1750 and you have that bear call side on, Tim, I think the better hedge is to go buy a call option on IWM.
Well, you can absolutely do that because then you have more control over the delta. There's smaller deltas than the credit spread. That's a really smart idea, is using the ETF, which is priced differently against the index, to delta hedge the position.
Well, you take, for example, real quick here, okay? You analyze it and say we're doing a bear call spread. I'm going out to your same date here, right?
Yep.
So and you did the 1800, right?
I did 1800, 1810. I built it about, 8-9 days ago, something like that.
Yeah. So you're profitable on the trade so far. So basically, if I'm doing that one here, you're receiving on the vertical, so you would have gotten more than this. And I'm sure you had a 10-point spread, right?
Yeah, I did. I think I got filled at 60 on the call side.
So basically your max risk here it was probably about 910. When you did the trade, probably.
Well, because I also had the bull put, yes, but
yeah. So here's the bear call side of it. You also have the bull put. The bull put you're not worried about in any capacity because you're at resistance. It's most likely going to break out. So the bull put you don't have to worry about. The bear call, I think the easier way to do it is to come here to IWM, which is priced much, much cheaper. Come out and just do a standard swing trade on it, right? You come do a standard swing trade. You're offsetting that. You got a cheap product. You can offset the potential risk. You swing trade it, you offset it, comes back down. It gives you a little bit better management techniques.
Young Cameron out there producing the shows for us. What I want you to do is I want you to write a note, tie it to a dove, have it fly to Coach Tyler Craig's house in Eagle Mountain, and tell him to write an options theory blog for tackle trading on how to use the ETF to hedge the index. This is a wonderful idea, Matt. I love it. It's very smart. Let's move on to the VIX and all the other commodities and whatnot. Keep working through our skyline. The volatility index down at 12. Ding, I'm not going to let you rant. I'm saving my mute button, so I don't want to have to use it right now. VIX is doing nothing. Nothing. Moving on. Look at the dollar next. We'll come back to the commodities here. Dollar actually is fine, nice candle. Consolidation range. At some point, we got to call this just neutral, right?
No, I've already done that. I did that a month ago. It's neutral.
Yeah, neutral. Until we see one way or the other that pattern break and run.
The fascinating thing about this pattern, though, Tim, you could get 10 technicians, 10 really good technicians analyzing this chart, and I'm willing to bet you come up with 10 different projections with different probabilities.
Well, and probably all those technicians trying to explain the price behavior through the chart, I'm going to listen more to the whack job who's ranting about the Federal Reserve because he's probably right. Manipulating prices, keeping it consolidated right now.
Well, yeah, he's right, but he's probably broke.
That's probably true as well. Moving on to crude oil. Continues to move here, Matt. Nice strong candles, green. You've had a nice move on this. What's your overall target on that crude oil? Are you looking for a
72.
Complete run? 72?
72. You got a significant whole number at 70, but there's really no historical ammunition there. You got a previous resistance up here at 72. I certainly could see crude getting into 72, maybe max 74. I think it's foolhardy off such a deep retracement that this had, Tim. I think it's foolish to target anything above previous levels of resistance. I think that's more hope than anything else. And if you're doing something more longer term, that's a different. But we're looking at a swing trade here. You're in the trade 7 to 10 days. I got into the trade back here. I'm already been in the trade 5-6 days already, in terms of price action. So, in looking at this, I think anything targeting anything above 72 or 74 is just too aggressive. And what I mean by that, in terms of those deep retracements here, I'm going to pull up Tim's favorite tool, and that's a Fibonacci retracement. But if I pull this up, as you can see, when I talk about a deep retracement, I'm talking about a retracement underneath this 61.8 level. So your standard retracements are 38, 50, and 61.8%. This retracement came all the way down into the 78%, 75, 78%. That's what I mean when I say the word deep retracement. A lot of times when you see these levels of deep retracement, it has a very difficult time showing price appreciation aggressively above the previous levels of resistance. So looking at this from the last perspective, this last run right here, Tim, you had the exact same retracements here that you had here, literally the exact same 78.6% retracement. And as this starts price appreciation, once it gets back up above the previous level of resistance, look what it does. It has a really hard time breathing the air at the higher level, retraces back down. And so because of the deep level of retracement, I think it's way, way, way too aggressive to target anything above 72 to 74. I'm a little concerned at 70, but my ultimate target is 72 and 74.
You just like bothering me with those fibs, don't you?
You didn't like the accuracy of it?
Well, first of all, it wasn't accurate. It dinged 50% and 63% and 75%, and it only went back up when it did. I mean, it's just another indicator.
You sound like a failed technician.
C'est la vie. All right, moving on. Let's crude oil. Beautiful move there. Good trigger on that too. And so look at natural gas here today. We looked at that yesterday, Matt, and they had inventories for the nat gas numbers. Some of the economics on that, they were expecting 39 billion in supply. They only got 24, and price is going up a little bit. This is a tricky pattern. You're below the moving averages, but you got 3 green candles in a row. Is that a signal you would take?
On the buy side?
Yeah.
Absolutely not. I know the inventories was good, but I've talked about this with crude. How a commodity or how the market responds to the economic data, it really depends on what the trend is, and it depends on where the stock is in relationship to support resistance. The exact same economic data, and I've seen this a tremendous amount, the exact same economic data would cause the market to sell if the market is at resistance versus cause the market to buy if the market's at support. That trend and that pattern in relationship to support and resistance is very important. Natural gas had a very positive bullish economic report today. The initial price action was bullish. The initial price action, as you can see, if I drop this down into the 15-minute chart, the initial price action was bullish, kind of driving back up. But as you can see, it's had no follow through and it's carried back down. A lot of this is due to the fact that the trend is bearish and you're hitting your head on a downward moving resistance level called the 20-day period moving average. So you're sitting at really a resistance pivot perspective. If I'm looking at this from a pure technical perspective, Tim, I'm looking at this more from a short perspective than a buying perspective.
Interesting. Yeah. I mean, the news came out and the market spiked. I thought maybe it had legs on it, but it hit that 20-day MA on the daily chart and just came right back down.
It just stuck. It just stuck. In the personal gold system, this is when I would issue a bear call spread.
Interesting. Awesome. I like it. Moving on to Bitcoin. I'm going to take a look at that one. We're going to keep looking at crypto. And XBT down there. Not a lot of follow through from when we talked about it on Tuesday. The big days, obviously Monday, Tuesday, you had the huge green candles, now a couple red candles in a row. Caution here in the crypto market short term. Very interesting action the last couple of weeks. We'll keep visiting this one. Any thought on Bitcoin?
The only thought I have is the Facebook warriors. They went the way of the bears in the stock market. They hibernated for 6 months. Let's give them a couple of days on Twitter and Facebook to celebrate before they come to the realization that Bitcoin's going to come back down in price.
Oh, Facebook warriors, social media warriors, all those Bitcoin millionaires. I think I said this the other day, but Peter Schiff was talking about how down in Puerto Rico, he moved to Puerto Rico And a lot of his neighbors are Bitcoin millionaires because you don't pay capital gains tax in Puerto Rico. So they all moved down there before they cashed out. Kind of a fascinating thing if you think about it. The island, do they even have power back on that island yet?
For some of it still doesn't have power.
You know, I'm not afraid of some self-promotion, and this was not me. I'm going to promote you here, Matt. Matt issued an initiative with our environmental hedging team last year, and I'm very proud of this, Matt, where he gave some money from Tackle Trading to have them go and install solar units inside a few homes there in Puerto Rico. And we need to do more stuff like that, Matt.
You know, it was last December, sent a few of our reps down there, a few of our coaches, team members down to Puerto Rico, led by Bobby Shannon from Environmental Hedging. And they spent a couple of weeks going up into the mountains of Puerto Rico to the people who need the power and need the help more than anybody else. It was a beautiful, beautiful thing.
Yeah, remember, you know, give it back once you made it, and also be socially aware. I think that's why we do this kind of stuff. Very, very good. All right, let's move on to some of the stocks in the news here today, Matt, and kind of really dig into this Facebook play. I have a student that I told him last night, I was on the phone with him before, you know, I started cooking dinner. I said, listen, tomorrow I've got an assignment for you. I want you to build a bull put on after the open, once you get intraday settling on Facebook using your rules to play that gap fill, okay? Now, mostly this was a paper trade so he could learn how gap fills work, right? What is the most common action this gap will take, Matt?
Most common action it's going to take is a slight upward movement in price followed through a fade to the downside.
That's right. So how long do those, because this is, would you call this a catastrophic gap?
I'm never calling anything a catastrophic gap on Facebook.
Yeah, maybe the ISRG back in the day.
Listen, let's get rid of this being an Enron situation. This is Facebook. Facebook made $13 billion last quarter.
So just a major gap, 20%.
It's definitely a major gap. It's most likely an exhaustion gap. You're most likely going to see some fade to the top side, followed by some downward movement. And when I talk about that, this can take weeks too. I mean, it can take weeks. It's not, the thing we saw with Netflix where you had a 1 day backfill followed by a downward movement in price, that's usually what takes weeks to occur, right? Yeah. It usually doesn't happen in a day. And you know, I felt like, and I even said this on Twitter yesterday, I felt like there was going to be a little bit of a snapback rally, but it was going to be nothing like we expected with Facebook, and that's, with Netflix. And that's kind of what you saw here. You saw the initial reaction to the downside, followed by a little bit of the buy the dip mentality at the open today. But here's the kicker, Tim. This 180 mark, that is now clearly a resistance level from Facebook. Yeah. I could support a bullish trade above 180. Okay, anything above below 180, I'm thinking neutral to down. But if it starts going above 180, you could see some fairly aggressive price action coming to the top side. But the one thing I do want to talk about here is it wasn't Facebook's numbers that drove this price action, Tim. Facebook's numbers, if you look at the actual earnings report, they came in slightly under where they were expected to do it. And now, for a stock like Facebook that is priced to perfection, you're going to see some negativity on its earnings for that. And when you look at the actual earnings announcement here, okay, if we just look at the actual announcement, here's the numbers, Tim. This is when the announcement was made. You can see it right here. Here's the numbers. The initial announcement drove down Facebook down about 6%, about 6%. You had a snapback rally come right after it, and then it kind of just faded in this action.
Well, and pause for a second. I want you to highlight that blue circle and the red circle and explain what that is.
This is the actual earnings announcement with the numbers. So this is when they come in with their earnings per share. This is when they come in with their revenues. Earnings per share came in at 174. It was expected at 183. If I just see those numbers, I expect Facebook down 5 to 10%. That's what I expect, just based on the numbers, because again, it's priced to perfection, right? But what happened, what was interesting is look at this right here. Once the conference call started, 5 minutes into that conference call, you started seeing Facebook just start getting absolutely slaughtered, right? Just beat up another 15% to the downside. It was, and on that conference call, it was them discussing slowing growth in the future. Okay.
Sure.
And they didn't go into a lot of detail on why they expect slowing growth in the future. Could it be the Cambridge Analytica situation? Could it be regulations? Could it be privacy concerns? Could it be a lot of those things? And the answer is yes.
GDPR regulations,
Right.
also new user acquisition, user behavior.
All of those.
Right.
But I think the biggest concern for the institutions that were driving the sell on Facebook yesterday was, I think, what Facebook's strategy is going to be coming into the election season. I think Facebook's going to be very conservative with their algorithms from a marketing perspective. I don't think they want any more negativity. I also believe Facebook is going to focus more on getting back to their core message of building communities, sharing stories, and so on and so forth, which will put a little bit more of a dent on their revenue from an advertising perspective. Now, I say this in conjunction with the fact that Facebook showed a 30% year over year in marketing, Tim. That is an amazing number. They went from about $9.75 billion in revenue second quarter of 2017 to over $13 billion in revenue in second quarter of 2018. That's a fantastic number, right? I think everybody can agree that making $13 billion with a 30% increase in ad revenue over the course of the last year is a fantastic number. Facebook's got to be better than that because, again, they're priced to perfection. I think the biggest concern was maybe Facebook coming off that aggressive advertising marketing. And as somebody who doesn't really like Facebook, and I'm not an investor in Facebook either, as somebody who doesn't like the company and doesn't like what they've done over the last 2 years, I will give them a nice little golf clap for actually acknowledging that there's privacy issues on the Facebook platform. I think their stock was a little overpriced coming into it. I think the hope was a little overpriced coming into it, and they got punished along the way. The question I have for everybody here, though, is this a buying opportunity from a long-term investor perspective? That's the question.
That's a tough call. You got to believe in the fundamentals and the vision, the future of Facebook. Facebook is a wonderful company, though. I know all those concerns.
If they get back to their core, Tim, about bringing communities together, that's a message I can support from an investor perspective. Yeah. I can't support a company who basically was sharing fake news across the board on every platform just for advertising revenue. I can't support that. I think Facebook lost their way in 2016 and 2017. But if they get back to who they are at their core, then yeah, that's something that I can support from a philosophical perspective. I do believe in investing in companies you like, you love, that you think can share a positive message to the world. I do believe in that. So, I'm looking at this as a potential long-term buying opportunity.
So let's throw this out there to the group. If you're looking at something more like a retirement account, long-term investor type decision, buy, sell, or pass on Facebook. Now, everybody think about that. Make your decision. Pop it in the chat. Question from Michael here, Matt, for you. Why do you say it's priced to perfection when the PE ratio is at 30? I think he's looking for clarity on what you're talking about.
The price to perfection is based on their earnings announcements. Facebook went up 42% after its Cambridge Analytica situation. That in the same time frame, the S&P is basically flat and the NASDAQ's up 8%. Facebook, when you're going up 42% coming into an earnings announcement, if you don't have a perfect earnings announcement, you're going to get beat up a little bit.
Yeah. So I think that the whole thing is the earnings reaction and what we expected from those revenue and earnings numbers, like Matt's clarifying there, Michael, not necessarily the PE ratio from a
PE ratio doesn't really have anything to do with it. PE ratio is just an evaluation of the fair value of the company.
That's right. Okay, very good. And a lot of people saying buy, Matt. We're getting more buys than not.
Listen, it's the number one stock held at the hedge fund level. If you're looking for a buying opportunity on Facebook, obviously that opportunity is not today.
Do me a quick solid. Look at the trade tab, and I want you to look at the options, because the video of the day right now is what a deep in the money option is. Mm-hmm. So if you bought the stock for 100 shares, Matt, you have to pay, $17,604. That's the cost for 100 shares of stock. Mm-hmm. Using our concept of the day, by the way, on our Tackle Trading channel, guys, we've been putting out a video of the day, and we're going to be doing that in our glossary and building. And
well,
teach that?
Very quickly, Tim, you have three things that you can expect to come out on the Tackle Trading YouTube channel every single day. You have the video definition that comes out every single day. It's a 4-minute video on just one single topic. That comes out at I believe, 10:30 a.m. Eastern Standard Time. You have the Tackle Trading halftime report that starts at 12:30 p.m. Eastern Standard Time. And then you have the market recap, which is right around 4:30 p.m. Eastern Standard Time. So you can make sure that, every day at Tackle, you can have those three things to tackle on the YouTube channel. Then we're also going to have other videos that, we basically, are looking at something, recording. We'll have those every day too.
Yeah. And guys, if you're enjoying our YouTube content, we're loving it. We're trying to build this thing out. Give us a quick thumbs up while we talk about this concept here. Matt, what if you wanted to go long Facebook, but instead of buying the equity, you used a deep in the money option instead? Well, you can get it cheaper.
I mean, you got three types of strike prices. You have in the money options, out of the money options, and at the money options. And that can be a little confusing for people at first, but at the money options are basically, if the stock price is 175, the 175 call and the 175 put are considered at the money. Mm-hmm. So any delta right around 0.50 would be considered an at the money option. In the money options are contracts that could be exercised theoretically, right? So Tim, if I had sold on Facebook the 63 delta 170 call option and the current stock is 176, that theoretically could be exercised. That's in the money. If I had bought, say, coming into its earnings yesterday, for example, let's say, I bought the $200, put option here for $5 yesterday, right? That is now an in the money option, which now theoretically I could exercise my right to sell the stock at 200. If I owned, the current stock price is 175. If I owned the 160 put option, I would never exercise my right to sell the stock at 160 when I could sell it to the market at 175, right? So that is considered out of the money. Out of the money options have small deltas. They have small prices, right? Now, out of the money options are primarily used as a way to sell options to cash flow. That's what they're primarily used for, right? Correct. There are some techniques where you buy put options to hedge with a 0.25 delta, but outside of that, you're really looking at, selling opportunities, cash flow systems, covered calls, naked puts, bull put spreads, bear call spreads, diagonal spreads, horizontal spreads. That's what they're primarily used for, is out of the money options. Out of the money options only have a valuation called extrinsic value. Extrinsic value is basically time decay. All that time is going to decay over the next, in this example right here, 85 days, right? In the money options have a combination of intrinsic value and extrinsic value. Intrinsic value is the real value of something. So for example, Tim, if I right now buy the 170 call option, okay, that's going to cost me $1,385 right now, okay? Of that $1,385, $600 are intrinsic, okay? $785 are extrinsic. I know that because the current price of 176 to 170 is $6 of intrinsic value. I have $6 of intrinsic value. The rest of the value is primarily made up of extrinsic value. In the money options are primarily used to buy those options. We don't like, as a trader, we don't like buying things that have only extrinsic value because 100% of that value is a decaying asset. It decays in time.
Yeah, and I'll tell you, if you're out there and you're listening, go over to Tackle Trading, and if you're looking to get clarity on a lot of the concepts and the terms that Matt talked about, Matt, we have a self-paced course over there called the Options 101 class, and then people can really kind of dig into it. I love the explanations, though. Intrinsic, extrinsic. There's a lot of stuff that starts flying around.
There's a lot of words, right? There's a lot of words, and for a lot of new traders, and even some veteran traders, those words can be overwhelming. Like when we talk about extrinsic value and theta, most people just think about that as depreciation. You buy a car, it depreciates in value. It's just a language. That's all it is. Intrinsic value is the real value of the option. Extrinsic value is the time decay portion of the option. in general layman's terms, we buy in the money and we sell out of the money is basically what we do. We buy intrinsic value, we sell extrinsic value. But what the buying in the money options is all about is lowering your cost, is what it's really all about. You come to Facebook right now, and let's say this is a retirement account, okay?
Yeah. And
let's say you see this as an opportunity to own a company that you think is a good company, that, basically you feel like the market overreacted to a slightly negative earnings report, and you think this company is a $300 company 5 years from now, or 4 years from now, or 3 years, whatever it is, right? But let's say you have $40,000 in your IRA, and you don't want to allocate 45% of that to just 100 shares of Facebook. Does that make sense?
Yeah.
Okay. So instead of doing that, what you can do is you can do a combination of going out a far, far time. You can go all the way out to June of 2020, 694 days from now. And you can come down and say, you know what? I'm going to buy this in the money option. It's got a 60 delta. It's the 180 strike price. Okay. So Matt said 180 was a very important support resistance level intraday. So I'm going to go buy a 2.5-year option at 180. So I'm going to go buy this 2.5-year option at 180. Right?
And that would be an at the money option.
Well, technically it's at the money just based on how the leap options work, but it's got an in the money delta of 0.60.
Yeah.
So instead of putting in $17,000 into that transaction, I can now buy this for right around $3,320. That is what an in the money option does. It allows you to go out in time, own this company, or better put, control this company for the next 694 days at 180. And if you're right on your projection that Facebook's going to go up over that time frame, then you've lowered your cost by $14,000, and you're going to make very similar money. I mean, let's look at it like this. And again, I'm just making some numbers up here, Tim, but let's say your price projection is in fact $300. Okay. Mm-hmm. So if you go and you buy the stock right now, you own 100 shares of the stock, and let me show you you own 100 shares of the stock from 164. Okay. If the stock goes to $300, you're going to make $12,386. Your investment capital was $17,000. You made $12,378 if you're right on your projection.
That'd be long-term investor.
That's a long-term. Yeah, that's your long-term. We're talking about Facebook literally doubling in price over the next couple of years is basically what we're talking about. Mm. And again, we're just making up numbers, but think about this from a philosophical perspective. Well, if I increase my knowledge level so that I understand how to trade options, I come down and I buy that, not the 175, it was the 180 call option. I come down and buy a 180 call option instead of, now watch this, Tim. Now, once again, on the stock, I was going to make $12,375. On the option, I'm going to make $9,769. Now, obviously, it's going to decay in time just a little bit every single day, but you get the point. I'm going to give up a little bit of my gain, but not that much, Tim. I'm going to give up a little bit of my gain, but whatever I give up in my gain, think about it. I now have $14,000 more to go make more long-term investments with.
Sure. And really it comes down to a reward risk ratio. And usually when you're playing the leverage and the derivative, you're going to have a better number on that. One extra addition here, Matt, I want you to do just to kind of highlight the difference between at the money and in the money is give me an 80 delta on that same strike, on that same expiration, I should say. So if you go deep in the money, you're getting a better value for your contract, right? But you got to pay about $3,000 more. Is that right?
You're making 20 cents more per $1 movement in Facebook, but your investment capital is 100% increased in cost.
Yeah. And some traders do that, but I prefer
some traders that don't understand how gamma and the option Greeks work do that. Some traders who aren't educated do that. But if you're educated and you understand how gamma works, that delta is going to increase over time to, increase to 80, 85, 90 if you're right on your projection. From an efficiency perspective, it makes more sense to buy the 60 delta at a cheaper cost and take advantage of the velocity of gamma.
One of my favorite things ever is to get into a math fight. I do enjoy that. Debate the deltas, the gammas, the vegas, and then traders always have their opinion, Matt. Even veterans, they always have the opinion about what it is.
How do you get into a math fight when it's really just gamma versus delta? I don't understand how you get into that math fight. It's an algorithm.
Well, not you and me.
The algorithm wins.
Well, because I think mathematics is the kind of thing that we assume it's all analytical because it's numbers and an algorithm, but there's also interpretation and experience. So some people start to develop bad habits based on a few short sample sizes, you know.
What did Jesse Livermore say about people with opinions?
Well, I don't know, but I'm looking forward to hearing.
He said, and I'm paraphrasing here, but he said, everybody has an opinion, right? But the market is never wrong. Opinions can be. Math isn't wrong. The algorithm isn't wrong. The Black-Scholes model isn't wrong. But people's opinions can be. So you can't argue the math behind the algorithm.
Right. Yeah. The MMM number was wrong yesterday. The market maker did get that one wrong. So their opinion was definitely wrong because a lot of that is based on assumptions of the future.
Hold on, though. That is an average gap of the past that doesn't equate to perfection in the future. This is an algorithm that has been pricing an option since 1973. I'm not arguing with the algorithm.
Hashtag math fight. I love it though. I mean, and the thing about using options is that when you go in the money, obviously you're getting leverage. If I'm going to invest, it just depends on what I'm trying to do with it.
Coming back to the original question, whether you're buying a long-term leap on Facebook or whether you're looking at investing in Facebook, Tim, is this an opportunity for you to invest in Facebook in your retirement account?
I think so. I think it's a real opportunity at some point in the next week or so. You don't have to rush that decision, by the way. A gap fill trade.
You don't buy this today.
No. You don't have to rush that decision.
No.
This is something you can be patient with, but you have to call it an opportunity. You have one of the top stocks in the market on a 20% discount. It's like on sale rack today, So
I'm looking for it from an investor perspective. I am doing that.
Yeah.
However, I will always let the technicals tell me when to pull the trigger.
For sure. The big stock, we got a lot of stocks also to hit here. More on Facebook, I'm sure, tomorrow as we examine the behavior. I did a bull put. If I'm looking at the long term, I'll probably wait until next week, I'm guessing. I do want to look at Amazon at some point. That's a key stock for tomorrow, Matt. We also had some other companies, Twitter, ExxonMobil.
I want to get your take on something, Tim.
Oh, no.
Here's Tesla again. Word came out that Elon called some dude's employer and got him fired for criticizing or writing something bad about the shorting Tesla. Word came out today that Elon is threatening suing Seeking Alpha for one of their analysts saying something bad about Tesla. We read reports yesterday that the cost to insure Elon's Tesla debt is at a second all-time high.
Maybe we should send Elon the quote from Jesse Livermore, by the way. What would be more appropriate than what Jesse said? Elon, listen, leave the blogger alone. Markets are never wrong. Opinions often are. If his opinions...
Elon, you're a billionaire. Leave the guy who's trying to feed his family alone.
He has had this rant on the media and analysts. That it happened in the earnings conference call. I didn't hear the conference call, but all the news last time, it was about how he lost his mind.
It's Trumpian-like.
Yeah, it very much is.
With attacking his attackers and, where he should just be like, listen, I'm a billionaire playboy of Tesla fame, okay? Let your production do the talking. If your Model S is that good, let it do the talking. Let the cells do the talking. What Elon should do is he should be like the Patriots and just point to the scoreboard. That's what Elon should do, but he's losing it. And I'm telling you, if he's gonna continue to lose this, he's gonna lose the support of his fanboy investors.
I agree with that. I don't like the story. The market doesn't really care here today. Look at that doji.
Well, it's just earnings right here.
Yeah. I mean, everything's going to come down to actually what happens with the company's fundamentals. I think it's becoming...
Tesla better blow them away.
They better do something good.
They better blow them away.
You look at what happened on Facebook and Netflix. You talk about going into Tesla earnings. I'm sure we'll highlight
Tesla has bigger fundamental concerns than either one of those companies do.
Young Cam, I want you to tweet at Elon Musk and give him Jesse Livermore's quote that Cody and Michael put in the chat here that Matt referenced. Markets are never wrong. Only options are. We'll see if we can get a retweet from old Elon. I doubt it, Matt.
I doubt it. Elon, we still love you.
I do.
You're losing it, brother.
Come on, dude. Take a deep breath. Go on a vacation. Do one of those micro meditations.
When's the Burning Man for the BlackRock? That's what he needs.
That's in August usually. I've never been.
Listen, Elon goes. I heard Elon goes every year.
Let's send Dean. Go see Dean Beckett at Burning Man, Elon, and get some of that.
He'll set you straight.
That's right. Our buddy, old Dean. We had an old podcast where we talked about Burning Man.
Yeah, I love old Dean.
Oh, say lovey. All right, so back to what we're looking at here. Obviously, Tesla, nothing going on. We'll hit that more later. The key is, Matt, is Amazon tomorrow, and we want to get to that at the end. We can do it now or at the very end.
Let's look at Amazon at the very end. Just very quickly, guys. One of the Tackle 25 stocks reporting earnings tonight is Intel. Intel, as you can see, I'm very concerned about this technical pattern. This is technically considered a kiss of death type of technical pattern. It doesn't care coming into the earnings. The earnings are tonight. If I can get if you just give me 1 second, Tim, I'll get the earnings whisper for Intel, and I'll kind of show you guys this. Earnings whisper for Intel consensus is 99 cents. The earnings whisper is slightly above that with net revenues of $16.9 billion for the second quarter of 2018. Intel's one of those companies, though, Tim, that, we were talking about this with kind of Boeing. Intel certainly can move. Right? It certainly can move. When you look at the gaps on Intel, and I'm just going to kind of give you roundabout numbers, 41.50 up to 43.50, $2 move. On this one here, you went from 45 to 48 to $3, well, 48.50, $3.50 move. You're looking at potential move here. Was that before the market or after the market? That was after the market right there. You're talking really kind of a net. Well, no, it actually got from 53 to 55.50, so about $2.50 move. So, Tim, we got some pretty consistency, $2.50 to $3 move. I'm going to say the market maker move is kind of in line with that. It's expected about 1.8. Based on the average gap range, I would expect a slightly higher increase than what the market maker move expects on Intel. And whenever you do that, you might want to look into buying a put option to protect it if you're an investor. If you're not an investor and you're looking to cash flow, that would lead me to price out an inverted butterfly. When my expectation is more than the markets, I price out an inverted butterfly is what I do.
Now, these are usually very boring earnings, but ExxonMobil and Chevron do lead the energy sector tomorrow morning. They don't report tonight. They report tomorrow morning. I'll be paying attention, obviously. I mean, they're two of the biggest companies in the world.
Yeah,
so
but they
pay attention.
They also don't move a lot. I think when you're looking at those two companies, you're looking more at the sector than you are the individual company.
Some other names that hit my radar: Merck, ABBV, Amgen, Starbucks, Electronic Arts. But I want to talk Twitter as well. Starbucks earning. Yeah, let's talk Twitter.
Talk Twitter.
So Twitter's not as big of a company. In fact, if I look up Twitter by market cap, it's nowhere near what Facebook is, not even close, right? Go to FinViz real quick. Pop up FinViz on your screen and put in Twitter up on the top. So these social media companies, what to expect, all that kind of stuff. And scroll up. Where's my market cap? $33 billion, okay? Internet information providers, click that subcategory underneath the name of Twitter. Facebook's 900 billion, Twitter is 40. So we're not talking about the same animal. Find the column for market cap, Matt, and organize it based on that. One more time. So we're not a Google, we're not a Facebook, we're not a Baidu, we're not even a JD.com, we're Twitter, but we're in the top 10. How do you handle earnings going into this, knowing that Facebook, who's much bigger, much more prevalent, much more focused on, just got kicked in the teeth?
It'll play a role, no doubt about that. Twitter is overvalued coming into it. It's not priced to perfection. That's not what Twitter is. Twitter is overvalued coming into its earnings announcements here. I'm looking for Twitter, on it. I'm not an investor in Twitter, but I'm actually kind of thinking about it, to be perfectly honest. Just in terms of my usage, personal usage, I actually like Twitter more than I like Facebook, to be perfectly honest with you. In terms of, I love YouTube. I really like Twitter, although, some people on Twitter are just some of the worst human beings in the history of mankind. But, being anonymous on Twitter is one thing. But I'm looking at this from a potential investor perspective. I'm just waiting until after the earnings announcement.
The last 4 quarters, 4 quarters ago, they lost.
Real quick, Tim.
Yep.
But to answer your question, Facebook's earnings is not playing a lot on my mind when I'm looking at Twitter tonight.
I don't think so either. I know that will be the headline. People are going to come into it. I agree that you should consider it because there is a correlation there. Logically, you should ask the question. Twitter's a different animal, completely different animal. It's just the nature of it. 4 quarters ago, they lost money. 3 quarters ago, they lost money. 2 quarters ago, they made money. Then they made money again last quarter, but not as much. They got to turn a profit, don't you think? What's the expectation for Twitter here? I think on Thinkorswim.
Well, some companies can miss slightly and they not get beat up.
Mm-hmm.
I think if Twitter misses, they'll get beat up.
Twitter earnings whisper.
I just had it. Let me look at it. So here's Twitter. We got Intel, so here's Twitter.
21 cents.
21 cents. Consensus is 17. Revenues of 642 million. Obviously, a much smaller company than Facebook and Google and whatnot. But looking to show a profit. I expect a higher than the consensus at 17. I think it's going to come in more with where the earnings whisper is. If they miss on those two, though, I expect Twitter to get beat up. I mean, you're talking about a stock year to date. If we just kind of look at the year to date numbers, you're talking about a stock that is up 70% year to date.
Yeah.
When you're up 70% year to date coming into an earnings announcement, you got to be a little concerned.
I like it, and the thing about it is, concern or not, I'm going to look at it in the morning. I've liked this company for a while. I've not pulled the trigger on it in quite some time. This earnings report is going to be a key number for me, Matt, watching and seeing how they react to this date. If they can come out on top running, it's going to go on the watch list. I don't know how
it's expected to gap over 10%.
Yeah. Yep. Going to be a crazy one. Interesting.
But how would you play that though? Real quick. How would you play that very quickly? And I know we'll end on Amazon, but if you expect a stock to gap so much, I mean, the market expects a $5 movement on Twitter on a $45 stock, Tim. That puts your range on the gap anywhere from here. It's currently at 42.50. So here at 37.50 right there. And here at 47.50. So this is kind of where the market expects Twitter to be tomorrow, somewhere, either 37 or up to 47. So if you expect that, what is the best way to play this? Would it be the short strangle where you're looking to cash flow, or would it be the inverted butterfly?
It's a really, really tough question. I don't know.
I'd have to run away. I don't know. I don't think the numbers could lead you to a conclusion here.
Can I tell you? I'll tell you what my answer would be, though. I'd probably do a handlebar mustache. Do you remember that?
For those of you listening, all of a sudden, me and Tim, a few years back, were back testing earnings strategies. And a lot of times, guys, when you're back testing things, you just start clicking buttons to where the risk graph looks good. Okay. And so I think Tim was bored. And so all of a sudden he starts clicking buttons on the option chain until he created the handlebar mustache risk graph. And I don't even know how you did it. It was one of the beautiful things I've ever seen.
I have many trading systems, Matt, that I only use. I don't even teach to my students. And it's not that I'm trying to keep them a secret. They just don't make sense.
You literally click buttons until you like something. That's not a system.
Well, a handlebar mustache is a system, but I only trade it every once in a blue moon. What I like about it, Matt, is it has an open-ended risk graph on both sides, like a handlebar. You've got volatility implications. It's got expirations over 2 different things. It is a super advanced trade, and the hardest part about it is managing it. So if I was going to do something on Twitter, I'd want to play the gap bi-directionally is what I would do, and I'd probably do some combination of strategy.
I would be very hesitant about short strangle on Twitter.
You know, I'm going to do the damn handlebar mustache now.
You know what I'm going to do? I'm going to grow a handlebar mustache. That's what I'm going to do. In fact, I will grow a handlebar mustache if we get, how many likes do we have on this halftime report right here?
14.
If we get 30 likes by the end of tonight, Tim, I will grow a handlebar mustache and I will do an entire halftime report with the handlebar mustache.
Oh, please God. Oh, please, everybody, please God, just click like.
Handlebar mustache. You will never be able to get rid of that sight in your mind.
Hold on.
I can grow a good cowboy handlebar mustache though.
I got to tell you, I'm going to go log into about all of my wife's different email accounts and just click.
I will check the likes, Tim.
This is manipulated data. It's like the Cambridge Analytica scandal.
Tim, I will check if I see 3 or 4 brand justices. I will check that. I will.
Honey.
If I see cousins that we have not seen in 30 years, if I see them starting to like stuff, I know you've set up some ghost accounts, buddy.
No, that's too funny.
30 likes though. By the end of tonight, 30 likes, and I promise you, handlebar mustache next week. The whole hour. Well,
now here's the thing though. That's probably a topic better for a mind of a trader or a cash flow club.
Oh yeah.
I'll tell you,
Absolutely.
I know it may not be the right form. We can do it if you, I mean, you made it, but you know, that's the kind of thing where you want to deep dive into one subject. I'll tell you what, Matt, you know, those webinars we do over at Tackle Trading allow us to kind of focus on a lot of different things. And I had an amazing coaches lounge this morning with our team because I allowed one of our students to kind of bring his screen up and I helped him show him how to do order entry and all that kind of stuff. Just incredible, different type of thing, you know? Yeah.
30 likes, Tim.
We're not going to get there.
We'll get there.
No, I don't know. We'll see.
Yeah. We'll see how ambitious people are.
All right. So anyway, so I do want to look at Amazon last here, Matt. And I know that we usually go an hour, but here we're going to go about 5 minutes long. Amazon is the most important company in the market, in my opinion. And I've been saying that for a long time. They account for so much of the gain on the entire S&P 500 and the NASDAQ for the year. By market cap, just by size, by veracity, they are one of the most important things that you can watch, even if you don't trade them. A lot of people don't trade them because they're too big and they don't like playing it that way. But they got earnings tonight. And if this market has risk, it's probably in this earnings report tonight, right? How do you handle that if you don't have a position on Amazon? If you do, what's your opinion on Amazon here?
Even more so than what I said about Facebook and Netflix, right? All part of the FANG stocks, no doubt about that. But not every stock is created equal. Amazon is not created equal. Facebook is not Amazon. Netflix is not Amazon. I don't even think Apple is Amazon these days. Amazon is one of those companies that, you know, like Michael asked me the question earlier today, it is priced for perfection, right? And it is completely overvalued. It's priced to drive. And unlike Facebook, where, you know, I had some concern coming into that Facebook earnings with the privacy and the Cambridge Analytics and how that would impact their earnings and how that would impact kind of and you've heard Zuckerberg talk about how in speeches, in fact, he talked in Congress when he talked about, you know, getting Facebook back to its core. So you had some concerns coming into that. I don't have those concerns coming into Amazon. I expect Amazon to exceed. And if Amazon doesn't exceed, I think Amazon can get beat up pretty hard.
They're up 60% year to date. Other companies.
They're up 33% year to date.
Nah.
Yeah. 1,200 to 1,800, bro, is 33%.
Well, if you start at 1,200, though, that's 60%.
No. 600 divided by... No, you're doing your math wrong, bro.
You're dividing the 600 by 1,800. Hashtag math fight all day long.
Yeah, it's not up 60%. It's up 33% you're doing.
No, they started at 1,200.
Yeah, you're up 33% year to date.
From 1,200 to 1,800, they've went up 600, starting at 1,200. Math fight, anyway. Yeah. So they have had, doesn't matter where you start that from, they're triple what Google did year to date. They're triple what Facebook did. They're double what Microsoft did. They're 4 times what Apple did. All of these other companies that have gone crazy and nuts up the board and just up, Amazon has been the leader, you know. Amazon has been the leader in the clubhouse, and they've been driving. I don't know how to play this one, Matt.
Tim, that's Amazon since the crash of 09.
That's crazy. 10 grand in Amazon would have been $34,000. Today it would be worth, what is that? 1811 times 10,000 or times 100 shares.
Tim, the low is $34.
A $3,400 investment 10 years ago would be worth $181,000 today.
No, it's more than that. Much more than that.
That's crazy.
You look at this stock, and I don't even know if words can describe how strong this stock has been. I've never seen anything in my investing career. Now, my investing career only goes back to 2005, but I am a student of history. I've never seen anything that has showed this much growth over such a long time frame. We've seen things explode in value before, right? We've seen things like Bitcoin in 2017. We've seen things dramatically rise, followed by a dramatic fall. We've seen that. But Tim, this thing has not had any fall. It didn't fall in the summer of 2011 when the market dropped 20%. It didn't fall on the Chinese concerns in August of 15. It didn't fall with Brexit of 2017. It has only had a relatively few down months in the marketplace over the last 120 months. This stock is ridiculously strong. There's nothing that I'm reading that comes off that it might not continue to do this. I think it's going to continue to be strong. Doesn't mean it's not going to have its dips. No doubt about that. It's got an extremely high P ratio. It is priced to perfection. If they miss, I expect a 100 to 200 decrease in price is what I expect. I think it will go. If they miss, I do believe it will go more than what the market expects. Now, Tim, the market expects an astonishing 100-point movement in Amazon. That's what the market expects. I expect a greater movement to the downside if they miss. I expect in line if they beat. That's my expectation.
Well, they've been growing earnings, growing their stock prices up, appreciation's up. They're one of the most important companies. And to me, the Facebook earnings impacts Amazon more than it might like a Twitter, because they're more in line with each other in terms of market.
Well, it's a thing. Ever since, what was his name? The guy from Mad Money. Jim
Cramer.
Yeah, Jim Cramer. Thank you for that. Ever since, and you got to give Cramer a lot of credit. Kramer's the guy who's the one who put the FANG stocks together. And when he put the FANG stocks together, this is 3 years ago, Tim. It's been one of the best trades that has ever happened. I think it's the number one trade in the last 3 years. You got to give Cramer a lot of credit for that. Great call on Kramer's part on the FANG stocks from a few years ago. So when you're looking at now those FANG stocks, they really kind of drive in line more with one another than they even do their own industry.
We'll take a look at it tomorrow in tomorrow's halftime report and see what happens.
You playing it?
I don't know. I'm more likely to play Twitter on a handlebar mustache. I've already got a few trades in today.
I'm staying away from Amazon.
I'm probably going to avoid it.
I'm avoiding Intel. I'm avoiding Amazon. I'm avoiding Starbucks. I'll probably make an inverted butterfly trade on Twitter.
That's right. Yeah, that's right. Well,
I would be shy about a short string on Twitter.
Couple of quick requests from the chat. CMG has earnings tonight. Your boy Cody. Give a quick take, a hot take.
A hot take. Stop eating at CMG. That's my hot take.
I'm hungry, so I might go.
The only way to play CMG's earnings is inverted butterflies.
Yeah, volatility stock. I mean,
this stock gaps and runs both ways.
Cody, run the numbers on an inverted fly. If you don't know how to do it, always in paper, obviously, until you perfect a system. Had one other one. I think I might have missed one. Now bull put. Jacques, who's one of our most loyal attendees all the time. He has a bull put on now. And he's got
CMG?
NOW.
Oh, NOW. NOW coming after it. Was it placed after earnings?
That's actually looks like 725A, so he must have been in it for a bit. It's got the 160, 155. He may be looking, I mean, it doesn't really matter what he did. Let's talk about it. If you're in it,
I don't mind it. You're in it. You're fine. You're fine with that. The one thing I'll tell you, Jacques, it's very risky to hold one vertical through a earnings announcement. If you're going to do that, because you're not taking advantage of volatility with holding a bull put spread through earnings. So you're taking the risk to the downside. Now, this stock Service Now doesn't move a lot, right? And because it doesn't move a lot on its earnings, you certainly could look at something like an iron condor instead of just the bull put. Look at the iron condor instead of a single vertical credit spread if you're looking to take advantage of the earnings play on that one. That's the only suggestion I can make.
Very good. All right. And Matt, I have one special thing I want to do. So as we wrap up the show, drop your screen for a second.
Very quickly, though, before you do whatever you're going to do, it's kind of scary to me right now.
Yeah.
But whatever you're going to do, remember, if you want the handlebar mustache next week, you go get your friends, you go get your family. Let's network market this thing, and let's get those 30 likes on here.
Doesn't it have to be 30 likes before we're done here?
No, by tonight. Tonight, I'll put a date on it. Tonight by 10 o'clock my time, that's Mountain Standard. That is midnight Eastern Standard Time. By midnight Eastern Standard Time, if you guys can push likes over 30, handlebar mustache next week.
All right. And
the whole hour, Tim.
By the way, if you're going to like it, you think somebody else will like it, click share. That'll be the way we get the likes out there. Go ahead and drop your video for a minute. I like my record player. Right?
Oh, you love it.
And my vinyl records. I was in the vinyl record shop a couple of years ago. And by the way, this album is terrible, but look at what I found.
That is fantastic.
So I have Fibonacci. So I figured I might have to give it to you, see if you like it. I don't know. But I thought that was kind of fun.
I want that framed on your wall.
Hey, man, I could put it up in the office. That actually would be pretty funny. It'd be better than the actual music on the album, I can tell you that.
Oh, I guarantee that music's probably terrible, but that color, that artwork, that name is fantastic. No doubt about that. Ladies and gentlemen, you've been sent through another edition of the Tackle Trading Halftime Report. Thank you so much for being the best part of tackle trading. As always, guys, if you're not a pro member, get over there to www.tackletrading.com. You can sign up for free to be a pro member of Tackle Trading for 15 days. You don't even need a credit card. You can get everything we do for our pro members, from the coaches lounges to the coaches shows to the technical analysis 101, options 101, and every other thing we do out there, including getting 4 premium scouting reports every single week in the stock market, the options market, the commodity market, and obviously the Forex market as well. We love our team over there at Tackle Trading, guys. Thank you so much for being a part of it. And like I said, 30 likes. Let's do this, team. All right, we're out.